Shares of Qlik Technologies are down today after the company reported second quarter results that beat on the top line but missed by a penny on the bottom line. Here to talk about the results are Lars Bjork, the company's CEO. Welcome, Lars.
Thank you, Greg.
All right, so you lost 2 cents in the quarter. Wall Street was expecting you to lose 1 cent, but revenues were up 26% on the top line. Why don't you put all those earnings into perspective?
Yes, I think we have accelerated growth. I'm pleased with what we came out with. I'm never really satisfied. You always want to get more. But I'm not really worried about the seasonality of profitability or loss. We are investing for what is to come. This is an investment year, and this is the time of the year that we make investments.
All right, and with regard to the full year, you guided revenues to 473 to 481. That's the million for the range. Consensus was at 478 million. So you're sandbagging a little bit. What's your second half view? Because Wall Street wasn't thrilled with your full year outlook.
I think we have a solid year. We're showing growth close to 25%. We want to be balanced in this market. It isn't the easiest market to sell in, but it's great opportunity out there. And taking all that into account, I think we have a very strong year.
Out there where? Who are the big buyers? And where are those big buyers? Is it Europe, America? Where are the orders coming from?
The orders are coming all over the place. We take a customer like Travelocity, who's now taking this outside of their operations into their volunteer initiatives. You can take University of Singapore, a very different place in the world, where they're using, instead of using books in schools, they're using QlikView to teach computer science. So they're all over the place, and they're looking for self-service BI platforms, easy-to-use tools.
And you have a new product coming up. Will you be rolling that in the third quarter or the fourth quarter?
We will have a phased approach, rolling it out into the fourth quarter with a limited availability. It's going to take BI into the future, and being mindful that we're going to give customers some time to migrate over.
And what's it going to be called? Is it going to be at a higher price point? Why will this new product drive sales? Tell me a little bit more about it, if you don't mind.
Yeah, so I think it will be easy to use. I think it will be adopted on any kind of platform. Think about it this way. Why shouldn't you be able to do the same on an iPad as you do on a laptop? We are going to incorporate that. Price points are going to be the same. I don't think prices can go up for enterprise software. If anything, they over time go down.
And speaking of enterprise software, how's the competition with IBM and Oracle? These are giants you're competing against with much, much larger market caps.
They are larger.
Startling giants, actually. They've had a rough time this summer.
I was going to say that too. I think what they represent in our industry is a lot of old technology, and customers are looking for something new, something fresh, and that's what we represent.
But will they look for you as a purchase price? Because you'd be a nice tuck-in for either of those companies, which, once again, have not had fantastic summers with regard to their earnings results and their stock prices.
Never know. You should ask them. What I can focus on is to build a strong, solid business, and then time will tell.
All right. Thanks a lot, Lars.
Thank you, Greg.
And thank you for watching The Street.